Beginning, we are concentrating on non-interest income because apart from interest income, non-interest income is very, very important, and this you can achieve only by giving the excellent service and a quick decisions. We have concentrated on processing charges. Then our treasury has delivered very good results. And apart from this, we have very good recovery in return of accounts, about 635 crores. Added to this, we sold about 840 crores worth of PSLC certificates. So each and every opportunity which is available in earning the non-interest income, we have used that, and the growth is 25% YOY, which is a decent growth.
Yields on advances have fallen QOQ and YOY. Tell us why. In the increasing rate environment, has this impacted the NIMs as well?
In Q1, the yield on advances was 7.03, and in Q2, we are expecting that it will be crossing 7.10 minimum. The reason is my 38% of my portfolio under debt, that is loan book, is linked with RLLR. And we have not passed on the 90 basis points increase in repo rate to our retail customers and also MSME customers. And we have passed on only 40 basis points as on 30th June. And the remaining amount we have passed on 7th July. And a portfolio of about 38% increase in 50 basis points on this portfolio, I think it is going to impact on a positive sense as far as yield and advances is concerned in Q2. Apart from this, in Q1, we have taken good exposure in AAA accounts, which are very safe, but at the same time, the yield will be a bit less. However, in Q2, we are expecting that because of the loading of the increased repo rate and also the rate that is going to be increased by the RBI, that also will be passing on to the customers during Q2, and we see a decent growth of about 7.10 to 7.15 comfortably.
So good morning. This is Nayantara joining in on the conversation. So can you actually, tell us more about what the impact will be of the NIMs? What's your guidance? You have analysts, shareholders, retail investors all tuning in.
The guidance is we will be crossing 2.90 NIM. And at present, we are at 2.78. And the next quarter, we are hopeful of crossing 2.8384. And going forward, 2.90 is our target.
Okay, so we've got to the guidance as far as NIMs go. What about NPAs? Significant improvements. That's been the larger trend that we've in fact seen across the public sector banks and the private sector banks. What's your guidance on that front?
Our target is, as far as GNPA is concerned, we want to bring it down to 6%. So now we are at 6.98%. Last year we are at 8.50%. There is a I can say drastic reduction as far as GNPA is concerned. And even net NPA also, last year it was at 3.46, now we are at 2.48. And we are targeting that the net NPA will be less than 2% going forward, and the gross will be less than 6%. And we believe in recovering more in NPA accounts compared to the amount of slippages that is going to have. Focusing on recovery and return of accounts also. So by this strategy, we are hopeful that our net NPA by the end of this year should be less than 2 and gross will be less than 6. Minimum target. This is our minimum target.
So the growth is strong, especially in corporate NBFC. Within infra and NBFC, where are you growing within your books?
Yeah, the growth in credit, basically we have concentrated on two aspects. One is RAM, second one is corporate. RAM, it constitutes about 56% and corporate 44%. In RAM also, we are growing at 14.87%, which is a decent growth, and we continue to grow at that pace in RAM sector. Now coming to corporate, we are very active in HAM projects, in infrastructure, and already we are having projects worth 50,000 crores under HAM project, which are underwritten by Canara Bank. And these projects which are underwritten and sanctioned, they will be disbursed in a phased manner, which again adds to my increase in credit figure. NBFCs, again, we are very active, and 98% of my NBFC portfolio exposure is to A and AA and AAA accounts, and we continue to entertain good NBFCs, and we like to take exposure there. Iron and steel, we are taking exposure, and especially under construction, we see a lot of traction. The real estate, we are entering as far as real estate housing is concerned. Because our housing loan growth is at 16%, we want to continue our growth of 16% to 17% under housing loan. For that, the raw material will be financing to the real estate under housing. So we are active under financing to real estate housing. So basically, we are concentrating on various sectors so that the growth will be consistent and risk is taken care.
Wider industry-related capex, when we talk about the capex cycle, do you get a sense it is kick-starting trends that you're seeing, especially across various sectors?
With the inquiries and the interactions we had in Q1, we see a lot of traction from the corporates to invest in the capex cycle in various sectors, not in one sector, in various sectors. And here the important thing is which institution is quick enough to interact with that particular corporate and finalize the deal. The bank which can do this, I think there the growth will be visible. And the capex cycle is picking up. That is my observation.
Right. Seems like a competitive environment for you, and fiercely one at that. So tell me, how is it that you're differentiating yourself to compete against peers in this kind of an environment in a risk-adjusted manner?
One thing is we concentrated on risk-weighted assets also and the rating of the corporates. And also we are conscious about the yield wherever we are lending. For example, if you see my portfolio in the last 1 year, our exposure to A and above rated accounts has increased from 69% to 78%. So we are very conscious about the risk, and the risk-weighted assets, which generally used to be at 76%, last quarter it has come down to 72%. Now as on 30th June 2022, it is 69%. So risk weightage wise, risk parameter wise, we are very conscious and we are taking care. And the second part is, once we presume we are convinced that this particular project is viable and also feasible and also we can take it, we take hardly 1 week to finalize the deal. That is how we are becoming a major player in financial market in India.
Okay, Mr. Prabhakar, we're going to leave it at that. Thank you so much for joining us today and taking us through the fine print that's Canara Bank for your stock that has very much been in focus and remains so. But on to another counter.